Hello guys, glad to have you on board again. Today we're going to prepare the upcoming week, covering all the global asset classes, a few cryptocurrencies first, and then we take care of the stock market, big forex pairs, the usual stuff. We're still going to have a quick look at the bond market, which is still pretty much hesitating, but we still have a reverse yield curve setting itself. So we're just going to have to talk about that, but it's not going to take long. Anyway, so cryptos first. So what do we have? We do have this breakout. That's great. We didn't even waited for the weekly candle close to break out of this triangle. We broke right before the future market reopened. So it's an interesting timing. Once again, I like how crypto markets does behave, but still. So here we have it. We broke up from this triangle. Like I said, I made a preparation video up on Saturday, if my memory is right, published right onto TradingView. Normally you should be able to see this video throughout my profile in TradingView, but normally I bet most of you guys already saw that at that point. So I'm not just going to say it all over again. What's been said in there is still pretty much valid. We had a 50% chance to trade out of this triangle. We pretty much chosen the upward movement. I'm not surprised, obviously. I wouldn't say that was expectable because everybody think it was the most probable. I don't nearly even think it was. It's pretty much like we had to flip a coin and it could be one face or another, and we basically had this one. So here we have to deal with it. I'm just applying the plan, which means we're reaching out to interesting selling prices. I'm definitely searching for bearish trades at the moment. Not just right now, because we need to make this rational. And I pretty much took almost an hour and a half later yesterday in Discord with a live stream for the French users. And I'm sorry I couldn't find the time to do it in English afterwards. But here is what I'm going to be doing this morning anyway. So you'll have access to the same content. It's just the other users had it yesterday instead of you. I'm sorry about that. It's a big community, and just let me be clear, it takes a freaking huge amount of time to take care of both language with a single person. So here's what I said. So we do need to have a scenario. That's the first thing, all right? You need to have a vision of what you're forecasting in the big picture. So let's say you're trading 1 hour chart time frame or something like that, taking swing trades. You need to have a global vision on the higher time frame. You need to have a picture of what the fuck's happening on a daily chart, for example. That's exactly what we're doing right in here. So we over-contextualize the stuff, like having a look at the extreme channels or something like that. So what we're doing here is that I do take swing trades on 1 hour, 4 hour. These are the time frame we actually trade on. But we have a look at the bigger picture, which is the daily chart. Reason why, remember what we were catching the bottoms down here. So many people just forget about that. They say, all right, Phil is now back into selling a market that rise. So how stupid is that guy? The prices are rising, the guy is selling. Yeah, just like the prices were fucking falling and I bought them. And now that you've got the aftermath, then you can very fucking see that I was right to do so. So am I right to sell? I would say you'll see. That doesn't mean it will obviously happen. I'm just a risk fucking manager, no future forecaster or something like that. I don't know what the hell's gonna happen. All I do is just making sure I don't take too much risk to go with or against something. All right, I'm moving against prices right now because I think we've got higher potential to retrace in the future. All right. So anyway, enough talking about what happened already. We don't really give a shit about that. I'm forecasting a goddamn range in here, but when we were back then, I had a target. The target was to reach out to the resistant context. That's exactly what we've done. So we're here. We're reaching out to my first targets when I was buying back then. I still have further profits to make, but still, the job is fucking done. So when it's done, what do? you forecast, you harvest the gain. That's simple as that. You had a plan, switching and changing that plan isn't part of it. I wasn't forecasting to miraculously going bullish after a dead body was just, no one was even caring about cryptos back in the day. They were just like dying. All right, so now we're here. I was right. I know some people were desperately trying to prove me I was wrong or whatever. I mean, the usual right and wrong battle that I try to put you guys as aside as possible, because this is nowhere like this is not even a question. Being right or wrong, who gives a shit? We're here to risk manage. And that's actually what you should focus on instead of the stupid guys in social networks that spend so much time with those simple 2 words. So, we're here, target filled. Normally, profit taking is what you should do in here, which means profit taking after a bullish move means freaking pulling them down. That's simple as that. That's why I expect some pullbacks. I don't expect strong reversal to reinstall a bearish trend. I'm just forecasting it is about time to lock on the gains, which will normally push prices to the downside and consolidate for a bit. So what I'm doing is trading the goddamn range I talked to you about for quite some time, meaning that we're going up, we're going to retrace. We're definitely not going to retrace to new lows, I don't think, unless we do have some stupid black swan or something like that. But still, I think retracement, and I think we're probably going to retrace almost 61 to 76%. So deep retracement to come forward. Still, it will take quite some time to set itself. It's a daily or weekly range, and ranges are the worst case scenario to forecast timing. So it may take long. It may have brutal, it may have irrational behaviors in between. All I know is that I want to sell high and buy low, because that's what you do in ranges. The psychology is not to find magical targets. It's just make sure you fucking buy low and sell high. So are we high right now? I think we do. But still, we're searching for a range boundary, and that's the second boundary. So first thing first, all the beginners, you shouldn't even get yourself in that kind of scenario. Remember that the beginners should trade the third boundary in a range, not the first one, because that's the end of the previous trend. So you shouldn't be fighting this if you're beginning. You shouldn't even try to search the second round boundaries, but you should search for the third one. So if you're a beginner, this is where you're going to buy for the first fucking time, all right? Remember how you should apply the strategy. When you're trading ranges, you must respect the strategy. I'm trading with you, so I accept that beginners can take heavier amounts of risk if you do it with my help or with any other experienced trader's support, because at least you're going to make sure that a professional does help and support with its own trade. So you're not trading alone, that kind of scenario. If you take heavier amounts of risks than you can actually handle on your own, then at least make sure that someone is oversighting this, all right? So this is what we're doing in here. We're trading this together because you're not supposed to trade that alone. So daily range, we're looking at the range boundary, but either you wait for a daily signal, all right, which would be viable. I mean, look at that. We've got the divergence, so we've got everything we need to forecast some selling action to come forward. And by the way, that wasn't there this earlier today. So we've got an overload cluster. That's great. Overload cluster, divergence. I would say the daily chart shows early signs of weaknesses. Probably these things I will exploit in the forthcoming days, but still, I'm going to be a little bit more aggressive in here. Normally, you should wait for the daily chart to give you a signal. I'll be a little bit more aggressive and do this on the 4-hour chart time frame. So this is what the 4-hour chart looks like. Normally, something should really ring a bell in here. Just once again, what is that kind of context? There's delete the prices, and you'll easily see what the fuck I want to do in here. What is that? What is this? All of this. First thing first, use rational decision-making process. Use the indicators. This is what they are meant for. Look at that. bang, bang, unfolding context 2 times in a row, not 3 times. In here the support context is unfolding, but not the resistance context, all right? You can, maybe you hardly seeing this, but we have folded context this time. So the resistance context is folding again, but the support context still irrationally unfolding, all right? So this could be excessive market pricing, bubbles, or at least it is an abnormal market. It is an emotional market. So first thing first, every fucking beginner, you don't get your hands on that kind of market. It's irrational, it's emotional, which means you're going to be irrational and emotional yourself. And you shouldn't be getting your hands in the dirt when it's too dangerous to you, unless you are oversighted by a professional, which means we do trade those scenarios because I trade them and I help you trading them with me, but you need to follow the goddamn rules. If you go aside from them, problems are down the corner. Obviously will be, because those contexts are very dangerous. But still, they're a lot helping to get some experience. They have a shit ton amount of educational content. This is why I'm sharing them with you. Not to put you into jeopardy or dangerous kind of scenarios, more likely because you're going to learn quite a lot out of those scenarios. How to handle emotions, because you're definitely going to feel a shit ton of emotions, intense emotion. You're going to make mistakes. What I care is that you do those mistakes. If you do, you don't hurt yourself. You don't take too much leverage. So if you end up taking a loss because you decided not to follow the plan for some reasons, I want you to make those mistakes. I just want to make sure you don't pay a lot for them. All right? Anyway, so 4-hour context, really dangerous. Only something that you can do with me. First thing first, we needed these context boxes to fold each other. So now we can trade this context again. It still is pretty fucking dangerous, but we can trade it. So it is definitely a trend. It is a stupid trend, obviously, because we can see the breakout, all right? You can see in here we've done context, all right? Remember, open the little boxes. Take your PDF manual. Take the organigram I've put in you I've compiled for you on the final pages. You should always have that pinned right next to your computer, so you can make sure that you've got your rules. Even I have it. I mean, you can hear that. It's a piece of paper. I printed it because I know those stuff, obviously, but I want to have them close to me so I can make sure that whenever I need the information, I have it, because I don't know every moderate, aggressive, or very aggressive, like taking profit 25%. I don't know that for, you know, I'm a very aggressive trader, so there is some numbers in here I don't know. Anyway, so context, trend channel, back to context. What the hell is this kind of stuff? It's definitely the trending context. And what maturity is that? It's definitely the fucking accumulation. All right? We're doing context, trend channel, back to context, plus a breakout. So here is the trend breakout. Trend breakout, what's the next step? Divergence. We had a pretty fucking divergence in here. Pull back, and final excess. So why did I trigger my profit taking in this area? Because I was just fucking following the strategy. Simple as that. What happened afterwards? The parabolic scheme, stupid stuff, FOMO trading, the usual crypto stuff. But was it right to profit taking here? Absolutely. Would I do it again if it was to be done it over again? I would exactly do it the same way. Was this expectable? It was possible, expected somehow, but still uncertain. No one knew if you would have this FOMO trade. I never expected this would be that big anyway. So I profited from this. Remember that I just took 15% off the table in here and another 10% there, which means I took the 25% I was expecting, but just first step in here, second step there. I've done the job like almost perfectly in terms of risk management. If I forgot about profit taking in here, that would have been a mistake. Because if you think this was expected, and no, it wasn't. It wasn't part of the plan. The first target was in here. We reached out to this target. We had the profit take. All right? The rest was just a big bonus. Great bonus. That's nice. That was good. But still, that wasn't necessary. All right? So what we've done is that instead of terminating the trend in here, we accelerate, and then this is what we had, irrational pricing, and we could very well have fucked it up right on here, like strong reversal, bubble, and V-sharp reversal. Reason why I took this bear trade, just in case we brutally reverse in here. We decided to do this, which is the final excess. So actually what we've done is accumulation, breakout. That could have been a pullback, but actually wasn't. Now we can say that this is where we've done the pullback with this range, and now we're doing the final excess. So what kind of fucking maturity are we trading right now? Late stage trend, things that you can go against, only if you're experienced, obviously. And these are the stuff we're gonna do together. So why am I looking for selling entries? Not because I don't like when market rise or they're rising for bad reasons. I don't nearly give a shit. We're looking at a range market top. In a 4-hour context, I see a trend, overextended trend, that is terminating itself. So obviously I'm looking at selling entries. Now take your piece of paper once again. What are you looking forward for when you're looking at a final excess? All right? You want to have prices back to context with a sine wave breakout, preferably. You need to see something that doesn't go along with cycles. That's exactly what we've got. Bullish breakout, sine wave breakout, and we're back into resistant context. So that's exactly what we're looking forward for in order to trend a final excess. So I have my goddamn context. That's all I care about. The future is just binary at that stage. Either I'm going to have a signal or not. If I have a signal, what am I going to do? I'm going to take the fucking trade. And then, after taking that trade, I'll put a stop loss according to the kind of signal I have and stuff like that, the usual risk management. And then, what's going to happen? It's just going to be a binary choice. Either I'll be right or wrong. But still, do I really care about that? No, I don't. I'll have an invalidation, I'll have a validation level, and whatever the fuck happens in between is none of my concern. It's just a market usual noisy fucking reaction. It will be noisy. Some people will be talking about triangles going up, down, 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 up, who's right, who's wrong, usual stuff in the social network. Will I even care about that? No way. All I care about is, as long as I do my job, I know that the longer I do this, the longer I just follow the goddamn rules, I'll just make money. And Bitcoin isn't more important than any fucking thing else. I apply this strategy to every asset. The goal is for you to understand that what brings the money is not the magic. It's just to repeat a same old fucking routine and do it always the same way. If you change anything to this routine, this is just not working. It works all by itself. It's not perfect. It comes along with losses because that's part of the job. You don't win 100% time. All you care is just making sure that the big wins are largely covering up the losses, and normally you should have at least 50-50 of winning to losing streaks. But you'll see, as you'll get better, you'll have a better psychology, you'll fall into far less traps. Normally, you should get yourself up to 70% chances of winning trades. That's the average for a speculator, all right? 30% losses, 70% gains, and normally you should make much more out of your gains than your losses. Anyway, so you already know about that. So I'm going to move on because we're already 20 minutes in. So about cryptos, that's exactly what I'm doing. So normally we wait for a 4-hour chart signal to trade the daily context boundary. All right, so we're getting a little bit more aggressive. Those who have very low risk profile, you wait for the daily signal. Those who have moderate profiles, I'd say yes, you can be a little bit more aggressive and look out for 4-hour final excess signal to be a little bit more aggressive. And those who are very aggressive, like I am, will even go lower than that. I will search for 1-hour signals. That's what I'll be doing because, once again, I do what I do. I'm a goddamn freaking aggressive speculator, which means I can eventually lose my first trade, but I'll take the second one and I'll have great prices. So that doesn't, being more aggressive always comes along with a higher level of risk taking. Higher level of risk taking means I'm ready to take a loss on the first shot. No problem with that. I have tighter stop losses. But still, that also means I'll have much bigger position sizing than a larger stop loss that I will have on a 4-hour chart time frame. More aggressive means more gains when it works out, but also higher level of risk. So bigger chance to take a loss. It's simple as that. That's how it works. More money down the corner if you're right, but still that also means you need to accept being proven wrong 1 or 2 times in the meantime. So I'm more aggressive, which means I'm trading in a context. I should be trading 4-hour, but I'll take a 1-hour chart signal trade. We're right into the expected area. I'm just using this channel as a forecast because in here prices have been a little bit too aggressive, so framework isn't adapting fast enough. But yes, this is the area I'm caring about. I think we're going to go there, make a little higher high. We had the first triangle without signals, obviously, regarding the stupid momentum we have. And I think we can go a little bit higher than that. So I don't think the signal is going to show up right now. I think probably later today or tomorrow when we'll ever catch up to a slightly higher high in here. I think we're going to have at least a first divergence signal to try shorting. I'm not saying this is the one that will work. All I'm saying is that a divergence, I'll take it. I'll give it a try. I'll rapidly secure the trade, and if it ends up being stop lost afterwards, that's the game. I'll try again the next time. All right? It's just 1-hour chart is going to be more aggressive. Definitely will be. But I also have definitely much better prices when the signal will trigger. All right? Just follow the strategy. In here, the plan is exactly the same. We're in a range context. All right? So let me sum up the informations. So daily. Oh, sorry. That's not what I want. So daily is a range. All right? There it is, a range top. So we're looking at a range top reversal. All right? Then you've got the H4 time frame. On H4, what do we have? Final excess. And on H1, what is the context? What is that? What does that look like? All right, look at this. So we can see irrational pricing, bubble, both support and resistance context being unfolding. So this area was a bubble. All right, so this was a bubble. Bubbles are always trend that goes that we're losing control. So it's an out of control trend that goes crazy fucking stupid. Generally, we can create speculative crashes afterwards. That's exactly what we might have done in here. Reason why we needed to try selling in here just in case we were about to speculatively crash afterwards. We didn't. We saw that we decided to make some kind of a pullback in the 4-hour chart time frame, and we're doing the final excess. Still, it looks like a range. Look at that. Anytime we range boundary. So what we have in here is a range. It is a bullish range, okay? It is a bullishly orientated range, but still, it is a range. Anytime we overcome the bearish context, the resistant context, is where we'll look at for selling entries. All right? So you really, really need to understand this. What we have in here is an ugly kind of context. I understand that you guys won't find this answer, but this is the right answer. In here, we're in a bullish range. All right? Which means the final excess, we're not trending anymore. We're still ranging to the upside in order to terminate the H4 trend. Whenever we'll terminate this trend, we'll probably reverse this to a bearish range after creating a bearish breakout. So the steps in here before validating the H4 time frame will be to neutralize or reverse the H1 range and create a bearish breakout afterwards. So step by step. In order to get the daily range top, we need to terminate the final excess. In order to do it, we need to clean up the bullish range and reverse it to a bearish range first before we actually get a bearish breakdown that will reverse the entire fucking scenario. We're looking for the daily chart. We're going to be a little bit more aggressive on the H4, but we need to make sure the H1 reverses first. All right, that's a complex process because we're dealing with 3 time frames in here. We're rarely going to have to do this, but it is necessary that you understand this. The multi-layered time frame, and always the highest one is more important. So you need to follow the highest one's context. It all set itself into a big scenario in here that I'm going to aggressively trade in an H1 time frame, but the targets will be on the daily chart. All right, this is for you to understand. Aggressive entry that will allow me to have a better price than waiting for the daily signal, but still the targets will be made on the daily chart. So anyway, waiting for 1 hour chart time frame to give me usual range signal. So I want to have a signal with a triangle aside, so outside of the resisting context to try something. The stop losses in here will be a little bit larger, so I would say a stop loss is probably going to be set at 9,800. I want a large stop loss in here because we're trading bearishly in a bullish fucking range. So it is definitely going to be dangerous. You don't want to have tight stop losses in there. All right? That's it for cryptos. I'm rapidly switching to the stock market. So China is pretty much trying to build some sort of support, but it's hesitating because Hang Seng isn't. So still pretty much uncertain at that stage. And I would just sum up all the informations at once. Just having a look at the cash market structures in the weekly behavior. How stupid that is. Oh, I hate doing that kind of stuff, but still. So this is what we have. All right, in a caching structure, which is important. We managed to close out of last week's open. It's a bearish close. We closed very much below, so this isn't good. This is a bad week. All right, we closed down to 50% of this candle. All right, the 50 lower boundary of this candle. The upper shadow is bigger than the lower shadow is. We closed below last week open, which is kind of, this was a hesitation candle, this brings us some negativity. Still, it is a fucking inside bar, which means we didn't manage to break the previous week's low. And that neutralizes the bearishness. So I would say we don't have any fucking clue about what the hell last week was. We kind of starting this week without any information. So it's hard to trade this because you don't know what's going to come over. Monday is going to be a tricky day. And to be honest, I'm not even going to trade today because I don't have a goddamn clue about what the hell's going to happen. The market will pick a decision and will take a direction for the week ahead. But we'll probably rapidly, and probably by Tuesday, we'll be breaking either the highs or the lows of this week's. But to me, it's a 50-50 game. I don't know a damn thing in here, so I'm not trading. I have no context to trade. The only thing I can tell you about is this. All right, so like we said, the daily chart gives us no information. We've got an inside bar in the daily as well, and as for now, the future market hasn't been breaking any of those two boundaries. So for intraday traders, the first things you want to do today is putting two alerts to the two boundaries of last Friday's session. All right, we're probably going to break one of those two. Not even to say we might be breaking both of them. So breaking one boundary doesn't even mean that we're going straight line in this direction. It's just if we break the down first, that's a sign that we have some doubt, some bearishness anyway. But still, that doesn't mean you can bearish breakout and put a stop loss in here because it could very well go there and be there 3 hours later. All right? So just be rational. This is the only reason why I don't even think there is any such thing as a risk management today. Just be alerted because that will be interesting to see how the market behaves in those two boundaries, but that doesn't even mean it's going to trigger a trade. If we go 4 hour context, do we have additional information in here? Oh, yes. Normally you should see something from here. I just let this be a few seconds so you can have a look. I hope some of you guys figure this out. I wouldn't necessarily expect that everyone finds that because it's a little bit tricky. So the beginners among you should very well not see it. But normally the experienced traders, those who have at least a year of experience with me, should definitely see what the fuck this is. You have a structure. You've got a pattern in here. It's clear, all right? You should be able to see those patterns with a little bit of experience. What we have is this, all right? Context, trend to context. Should ring a bell. Sorry, yeah, it should ring a bell. I hope you figured it out. It could be a potential breakout context, or at least an accumulation context preceding a potential breakout, which means we accumulate, and if we ever break down both the context channel and the trend channel, so in here, if we're about to do this, there we could have a potential breakdown signal, breakdown context. The thing is that breakouts must mean something in the higher time frame, which means do we have room room to break down in here? Oh my goodness, yes we do. That means we will break down the bullish trend channel and do what? Confirm the goddamn range. So could we break down 4-hour chart this week? Yes, we could. Is it going to happen? I don't know. And I'm going to be honest in here, all right? The thing is that if I do follow my technicals only, all right, just my technicals, having a look at my weekly charts, what I see, what I think about the stock market, its maturity in the weekly and monthly charts, I definitely think we do have a goddamn reversal setting itself, long-term reversal, that we're heading toward recession trades and potential market crashes and stuff like that. Yes, I do believe that. Not because I'm a bearish or perma-bear fucking guy, just because all the technical informations I have and fundamental technical structures and stuff like that, slowing down economy, rising tensions, trade war, fucking stuff like that, share buybacks. When I put it all together, it just means one thing: we're pretty fucking late stage trending and we are gonna have to reverse. That's not the end of the world. That's just that's just how things work. Breathe in, breathe out. Anyway, you know about that. So technicals, fundamentals to me head in the same way into a bearish range, which means we're ranging, we're hesitating first, but the finality is probably some strong bearishness to show up. We had a fucking weekly signal, all right? So it didn't really trigger the signal in here, but still, I know why this hasn't been triggering, because I know my algorithm. This is a protection system I've been putting in here, because normally double tops rarely produce a reversal. It's so rare that I decided to put countermeasures. So in here there should be a signal, just there isn't, because it is on the same price level, and therefore momentum is putting this pattern away. It's putting it aside. It's a countermeasure that just deletes any signal on a double top structure. So there's no signal because of it. That doesn't mean we're not going to reverse out of a double top. It's just less likely to be, at least not enough to trigger a signal, which means we're trading a signal in here without a momentum signal. That doesn't mean I'm not taking the trade. That only means the trade is risky. It's riskier than a normal trade with a decent signals and stuff like that. I'm taking the trade. I'm taking the risk. But I'm limiting this risk. I'm aware of the problem that I'm trading without a signal. Therefore, I decide to take the trade anyway. I'm just making sure I'm less aggressive. That's exactly what I've been doing. Remember, I took this aggressive trade. It been ending up fucking me straight line and taking my stop loss. I have no regret. The market fucked me, but still, I'm standing still. I think we have some bearishness to come. I could be right, I could be wrong, future will tell. So, 4 hour, if we do break down, is the validation of my scenario, which means we have a weekly fucking reversal in here, and we might have potentially a double top setting itself, right? So we'll see about that. It is hard to say, but if we do have a breakout in here, I think it's going to be the breakout that is going to push us to the downsides of that range. So at least I think 61% fib is going to be the target. Everyone is going to be thinking that we're going to go bullish out of 38% fib. I think we're going to have to manage the risk in here, so partial profit takes, secure the gains and stuff like that. But I think this is the target we want. If we fuck up the trend channel, we're probably going to go 61%. So don't forget the target is there. We'll have to risk manage in here, just making sure we not lose the gains if there is some unexpected pullback, all right? Because there is something really important you need to understand. In here, like I said, we've got something ugly regarding the stock market. This is something you really need to bear in mind if you're trading this thing, because right now, what we have is a little bit more complex. Like I said earlier, we've got some dangerous triad at play in here. Normally, we're supposed to have just to take care of fundamentals, like fundamental trends, in order to weekly trade. You need to make sure that fundamentals follows the plan, and that you have technicals, and you just do this, all right? The problem in here is that the situation is a little bit more complex, because we got like something like a plunge protection team at play, and we definitely know it, because we've got this dangerous threesome we've been talking about, because now we've got the financial institutions, talking about the Goldman Sachs, the Morgan Stanleys, the big names, all right, the big guys, the market makers, all right, they're sitting at a table with the White House and the Fed. So all these guys, all right, they're sitting in a table. We know that, all right, it's not even hidden. Those guys have been talking together to set another kind of a plunge protection team, like the thing that's been causing some crashes in the past, and we don't even remember it. But anyway, that's exactly the same stuff. So these guys are sitting in chairs all together, thinking about and talking about how we can prevent the market from plunging. So plunge protection team all over again. We know how it ended back then when he tried, and still we're doing it all over again. So those guys are talking. They're doing this dangerous threesome we've been talking about, which is a triangular structure, very unstable, and it's not going to end up fine. It's always going to end up dangerously putting one of those three-party stuff aside. So because that's how it is. We always had two stuff, the Fed and the market makers. The political part of it was always aside. I mean, normally the White House shouldn't even fucking care about Wall Street's, or they care, but they don't try to be in the game. That's exactly what this new administration in the White House has been doing. They want a three-fucking-party, a threesome with the market and the Fed. And that's how dangerous this is, because we shouldn't be dealing with political in this stuff, and we do. So now we have a problem. Like I said, to me, this problem is going to lead us to a very dangerous crash in the US, but still, it's playing at the moment. It's what's at play, and it's creating heavy fucking distortions from pricings, and it's been doing into shorter time frames, but now it's doing on fucking weekly charts, which means it's dealing with fundamentals. The White House is manipulating the weekly charts, and that's a big of a deal. That's a big danger, because they better want to handle this well, because if they don't, they're going to have weekly divergence to deal with. That means crashing. All right, let's be honest. Weekly consolidations are crashes. So the White House does anything they can to prevent a crash to show up, but they will create one. That's exactly how the story will end. The thing is that we don't know when it will be, because they're doing anything they can to push it further in time. It will happen. It's obvious. It's inevitable. It will happen, and the longer we push it away, the further away we try to push it, the harder it will hit back at us. So the US does anything they can. They trade war, they fucking bullshit the entire economy, but still, they're doing anything they can to push it further away in time. But still, it will happen. I'm sure about that. This isn't certainty. Every fucking market goes down because it has to be. That's how market inflows and outflows works. We can try to push it further away in time, but it will still strike back at us anyway. But still, how do we deal with it? It's a higher level of uncertainty, because in a technical and fundamental usual perspective, we should be bearish by now. We should already be bearish, but still, we can see it is dangerously not working. We've got some weekly signals have been invalidated or something like that. So yes, the plunge protection team is at play. How do you do with it? Then, first thing first, you are less aggressive, because if you're too aggressive, then you're dealing with a higher and stronger forces than you are. We're not making the market. We're playing with it, all right? We're playing by the rules. If you're trading, you need to play by the rules. If you play against them, then you're just going to be pain trade after pain trade. So it's not how it works, all right? Less aggressive, because I took my lesson. Now I know the plunge protection team is at play. They fucked me. They definitely are the one responsible for my 15% loss. But still, I was too aggressive, and those guys were stronger than me, so they took my money. That's how it fucking works in the market. Am I pissed off? Yes, a little bit. I've been, but still, I mean, they took a little bit out of me. I'll take more in the end. That's all I care. So, just understand, how am I going to process this? I know stronger forces are trying to control something they won't be able to control, so all I care about is to be there the day they will fail, because this is where I'm going to make a shit ton of money. But in the meantime, there are two options. Either you play with them, you play by the rules, you accept that the market is bullish, is bullishly impacted, is bullishly supported, and distorted by those guys, they're creating heavy fucking distortions. We have a reverse yield curve, and that's because of it. These are the side effects of what they're doing. This will obviously all line up together to a freaking market crash later in time, but still, for now, they think they're under control, and I have to admit, prices tend to suggest they do. So, until further notice, and as long as they do control, we'll let them do. All right? Which means I have an ethical problem in here. I cannot accept such thing because I know how it ends, and I don't want to be part of the game. So I'm not buying. That's a personal choice. I'm aware of that. That's an ethical conflict I have. That doesn't mean you have to have it as well. If you have no ethical problems about following the plunge protection team, then you can do it. If we do have bullish signals, then you can do it. And I'll totally agree with that. I personally won't follow because of my ethical problems in here. But I just don't want to trade against my personal conviction. I would like not to trade, but that doesn't mean I'm going to sell. You need to understand the three purpose of market. You can buy, you can sell, and you can just fucking do nothing. So I try to sell because this is my time to trade. But still, if I fail, meaning if the bears have just given everything they had, and if they never end up going to the previous support, then look at this. I mean, let's be honest. Once again, I'm looking for bearish signals, so I'm focused on bearish information, but still, I don't ignore the bullish ones. This could be a hidden bullish divergence. If they manage to build a support out of here, meaning the plunge protection team just prevents any fucking breakouts, if we just die in here, at some point the bears tried. If we break any resistance, this is a hidden bullish divergence. You can see the signal is shown by fucking sine wave, by momentum. So if we're about to do this and this, that kind of makes sense to me. It's not what I like. It's not what I think is going to happen. But still, if it shows up, I'll understand that. It's a pattern. It's not a legitimate pattern because it's been caused by freaking dangerous manipulation, and we'll have to pay for this in the future, but still, that's in the future. I'm not going to sell the market if it's recovering. I'll wait for this stupid game to be in a dangerous area again, in which I'll try to sell again. All right? You really need to understand that. All right? It can happen because those guys do anything they can to prevent the market from falling, but it is not going to work in the end. We all know that. But still, it can work for an additional few months. And if it does, then we can have a quiet and calm summer. And in that perspective, you don't want to be the guy who fights that. You don't want. So if that's what's about to come, I'll just let it fucking go. I'll do something else during the summer, and I'll wait for the next time, probably September or October, when some other bearishness might be showing up down the corner, and we'll see. This is later in time. We'll have further information, new signals, new information. So I just have a plan. I'm waiting for the market to give me the actual direction. Either we start breaking down in here in this area, we range a little bit, and then we break down in 4-hour chart time frame, or the bulls have it under control, and I will let them go. I will let it go. I'll just surrender. That doesn't mean I'll take a loss, because once again, what I've done with you guys is shorting this area. These trades, I still have them. So this area, if they go up to the resistance, it's no loss. I'm just going to give up my gains. And that's no big deal to me. I'm speculating, which means that's no problem. I'm just reinvesting those gains. I'm taking the risk of losing my gains just to make bigger, much bigger gain eventually in the future. But the difference is those trades, I'm not playing quid or double. What I'm doing is that those trades, they'll help me being way more aggressive if the breakout ever happens. Because without those trades, breakout trading in this area would be pretty dangerous. Okay? So I need those trades to help managing the risk in this area. So for the week to come, two options. Either they go there and they find a strong support, meaning they try to break the previous week's low. All right? These lows, or sorry, is this previous week's low or am I wrong? No, this is previous week low. So we could eventually find some strong support in this area. If they do, meaning we just go there and we fail the breakout and we rebound, All right, so watch out for support signals this week in this area. If they fail, then the breakdown will occur, and then I'll be ready to trade the breakdown of this area. Option number 2, we go up, straight up to this area. The one we've highlighted, we go back into the trend channel in here, and we try to look for reversals. If we do have a reversal, we'll have a pretty nice accumulation, all right? Like, we made a first step, which means we could bearish breakdown. We're mature for a bearish breakdown. Still, it requires a little bit of patience just to make sure the plunge protection team doesn't wrong foot us right after, all right? This is why you don't trade if we go there, because if we go there, that doesn't mean we're obviously breaking down. If you take the breakout by anticipation, I think you're just gonna let them fuck you. It's simple as that. I really feel that. I think they're gonna just let us go there just to like cry for bear and then just gonna wrong foot us. So don't be too bearish. If the goal is to bearish breakdown, then make sure that you have this breakdown clear and clean with candle closes. If you go in too fast, and I think it's just you're gonna be in a bear trap. So other way, everything goes along just fine. The White House keeps on feeding good news, and the market doesn't question any fucking thing. The plunge protection teams had it under control. Then it is back to resistant context, and either we build a triangle. All right, that's also an option. Don't be surprised if we ever have to do something like that, like building a market top in here and just dying like that. That's also possible. I would say look out for this area close to the trend channel in here. There will be a tiny cluster to watch out for in a 1 hour context, or you wait for this area. All right, so these are the two options for resistance this week, either triangle or either we do an ABC kind of structure to correct. All I care about is that we don't dig deeper into the resistance trend channel, so we can rapidly afterwards go back to the context channel and break it down. All right. So that's it for the global vision. You need to be aware that all of this gives us the heavy distortions we have in any other correlated asset like the dollar, the yen, the VIX, the gold, the WTI. All those shits will have side effects, which is volatility, unpredictability, distortions, because we do have a distortion out of Wall Street because of the stupid manipulation of the triad. The problem is they have to handle the risk elsewhere. So this is why we've got freaking bullshit out of WTI. The gold is trying to be manipulated as well. So they do anything they can to manage the risk. All right. This is why we've got distortion all across the board at the moment. This is why it's very dangerous to trade. Where some are trading, volumes will go down. Dangerous will still be down the corner, and we'll still have the White House manipulation on top of this. So this current trading context is the most dangerous I've ever seen in 8 years of trading. So I'm aware of this, and you guys are learning in this context. So most of you guys are beginner. You should just have one rational decision out of this: reduce the leverage to the minimum for the forthcoming month. Until further notice, either White House getting out of control or the manipulation ending some way, but I don't really even think the White House is gonna pull back out of here. They're just gonna fuck it up until it explodes. So until further notice, and throughout the summer, I strongly invite you to reduce your leverage. I'll personally do it as well. So please reduce as well. It also obviously gonna bring down your gains, but make sure at least it brings down your losses. If you're greedy, and when you're learning, you're generally losing money, so you're just going to lose more money. All right? But even I, myself, my goal is to make money. I mean, I'm a stable trader. I've been doing this for years. I hardly going to take losses. I'm taking gains, so by reducing my leverage, I'm going to reduce my gains. Obviously, I will. But the problem is, I can hardly understand the market right now because manipulations are just altering my patterns, my stuff like that. I'm aware of this. I rather like to be less performant, have less money, less income, but still rationally applying the strategy, safely managing this instead of trying to fight the market because I have big amounts of money at play. So it is just like a comfortable situation to reduce the leverage because it reduces the emotions you put in your trades. And to be honest, I can feel the manipulation. I see it because I have enough experience to see that something goes wrong, and I'm not stupid. So the thing is that I have to play by the rules. Like I said, these guys are the market makers. I'm just here to play with the market. So who's got control? They do. I know this control won't be there forever, and I definitely won't be there when they won't be handling this, but still, in the meantime, they will be right and I'll be wrong. So, as I might have some problems to deal with the strategies in the forthcoming days and weeks on swing trades, I'm just reducing my goddamn leverage. I'll still be there the day it will go out of control. I'll still reinforce my position at that moment, but until then, I just don't want to bring up my losses. That's simple as that. These guys will probably manipulate the prices to induce some behaviors. They'll probably just do anything they can to give me bearish signals to just take my stop losses afterwards. That's what they've been doing. This is why they took the 50%. I say they, but I would say they're just impacting the market. We can clearly see the market isn't going rational, but still, the market is the market, and you don't fight it. So you really need to understand that, all right? Bring down the leverage is a security. It's just what is the most rational decision to make out there. Still being trading against that, because it's not going to last forever, and I'm mostly selling rather than buying in this area, but I'm aware that this manipulation can last longer than expected. And if it does, I just want to be there until they don't. And in order to do this, I just need to make sure I restrain my losses as much as possible until the day I'll be right. And the day I'll be right, you can be damn sure I'll be the first one to reinforce. But until then, tiny position sizing, a lot of patience, resilience to your strategy is absolutely key element to succeed into this end of cycle. Because obviously Wall Street doesn't want this to happen. Obviously it will happen sooner or later. But until then, you need to manage the uncertainty about the timing. That being said, as I said, it's going to impact every ongoing scenario, like the yen, the dollar, the gold, everything like that. So still, you need to be rationally trading what you see. What you see is bearish signals on most of those assets, and you need to trade bearish. But you need to be aware that they do everything they can to prevent this from happening. So, some kind of invisible hand is acting against you, and this hand is freaking strong. It's not going to last forever, but still you need to do your job, because if you doubt, if you say now failed strategy isn't working, something goes wrong with its strategy, I can tell you, yes, something goes wrong at the moment, but it's not the strategy. Strategy just goes along. It's been doing just fine for years, and it's not going to change. It's just we've got some alter context at the moment, which is a dangerous manipulated context. It is creating distortions. Like I said, those distortions won't be there forever, but the strategy will be. So stick to what is going to be useful in time, in longer time scales. The current manipulations will be over sooner or later. The strategy will still be applicable in its own way. These distortions only apply to the stock market and the derivative things like the major forex currencies and the WTI, the gold, all the assets that are linked to risks, the junk bonds, the VIX, the bond market itself. They all have a little bit of distortions because of what those guys are doing, but still, like I said, don't fight it. Don't try to be the justice guy who said, that's not normal, this guy shouldn't manipulate the market. They do whatever the fuck they want, and you've got nothing to do with it. You're not going to stop them. So don't fight them. Just play rational. All right, I'm going to stop in here because I'm doing this a little bit too much in a row. So it's kind of a brainwashing system at the moment. So, all right, I just want you to make sure that you understand that if the strategy is put in jeopardy in the dailies and most likely in the weekly context and daily context, it's just normal. It's because we've got distortions, and until we manage to deal with them, it can be a little bit tricky to swing trade in the US. But still, you need to follow the plan. The plan is we do have bearish signal. The strategy says to sell, you sell. You just make sure you don't put too much money in there, because you must be aware that there are some opposite forces that might be trying to fuck up technicals. All right? But still, technicals is the only thing you should follow, because this is the only thing that makes the difference between a trader and someone who is gut trading. Because the difference is when you gut trade, you trade what you think. When you're technically trading, you trade what you see according to what you think. And when both of them are aligning together, then you limit the risk. This is what risk limitation is about, using technicals to make sure you're not gut trading. All right? So that being said, I'm going to leave you guys with that. First of all, we're going to just terminate with AUDNZD, which is a side asset, not really risk correlated and stuff like that. So this is pretty much aside from those manipulation. And on this one, we still follow the plan. All right. So we got reactivations last week, but not a strong weekly candle close. We closed in the 50% of the week. Let me just show you what it looked like. All right, so kind of a inside bar, hesitating, closing out the lows, but still. So this week is going to be interesting. Either we lose it, we go back to the previous lows, and we're going to make new lows in the weeks to come. We're going to go there. Option number 2, we go bullish, and we kind of go back to the resistance for a potential breakout to occur. The thing is that, to me, it's all linked to AUDNZD. I think it's more to AUD, sorry. It's more about this than it is about the AUDNZD spread. I think, and I told you in Discord, I'm buying AUD as well, because I think this crazy fucking oversold cluster followed by a taking profit has 2 options. First option, we make a little divergence. We push a little bit further and then we buy. All right, so in that perspective, if you bought that low just like I did, large stop losses are absolutely necessary, because I wouldn't be surprised if we were to go a little bit lower. I paid exactly at 76% fib, so I do have good prices at the moment. But like I said, going a little bit below isn't a problem. It's absolutely normal. You just take that in the risk management with larger stop losses. If it rises back to the resistance and cross it, then the trade is validated. This is how you're going to make money and everything like that. So for now, we're speculating. It's a speculative stage of that trade. If it reactivates, this is where we're going to be safe and sound. The thing is that I don't know, because the AUDUSD could very well do this. We're in a very dangerous area. The consolidation is mature. You can see the 2 sets of waves. All right, so anytime we reactivate, will be no pullback. We'll be trading wave 3, 1, 2, 3. All right, so the next wave is probably going to be the trend wave, the one that sets the motion in place, that brings the gain and everything like that. So this is the one I want to be into. This is the one I want to be leveraged into, obviously. But still, for now, it's speculative. So no leverage at the moment. Absolutely not possible. Just speculative exposures, patience, follow the strategies and stuff like that. All right, there's a stop loss obviously at the lows. If we go below those lows, end of the story. We'll start again with new prices. As for now, I see absolutely no reason to do so. I'm looking at buying entries, but with a risk management. All right, so if AUD strongly reactivates, you can be damn sure that AUDNZD is going to do as well. If AUD breaks to new lows, all right, or goes below, it's possible as well. All right, if AUD has to do this divergence and stuff like that, then we're going to range for a longer period of time, and we can probably retrace to deeper valuations like those major supports areas and stuff like that. All right, so it's hard to say what's going to be the game about AUDNZD. It mostly depends on how strong will be the AUD versus the dollar. I think the NZD is just a follower anyway. So if the AUD managed to find some strength versus the dollar, then AUDNZD will reactivate pretty strongly as well. If it doesn't, then we're probably going to have to set ourselves in a longer time frames kind of range. That's it. All right, see you guys later.